Good morning, good morning. Looks like the market opened about 5 minutes ago. So the market is open. I have no idea what it's doing yet. I haven't looked. I've been trying to get set up for my stream here. Ken Creager from Black Swan Financial Advisors. This is one of my advanced options videos. Basically do this just about every single Friday because Friday is options expiration day. And as you know, as we go through over time and we trade in options, Fridays are the days that your options are going to be expiring, and if you're going to do anything, you need to do it before the market closes on Friday. The only thing you need to be aware of is if the market is closed on Friday, then Thursday will be option expiration day. So anyway, I hope you're finding this very valuable. I wish I would have had a similar series that I could have had reference to way back, when I first started. I didn't make a lot of mistakes in trading options, but I did make a few, and I lost money in almost every one of those mistakes that I made. I lost money. Thankfully, I didn't lose, a lot of money because I was trading very conservative with only a few contracts and so forth and trying to be super careful. But I think you'll find the value of this advanced options course more than what you paid for it. Please, as you're doing your own trades, have the video open, watch what you're doing yourself, trade alongside one of my trades just to make sure that you do it properly. And last week I talked a little bit about, sell to open, sell to close, buy to open, buy to close, and just how you do those transactions. So please follow along. There's my website, my YouTube channel, and an email for you. So again, avoid costly mistakes. TLT, I don't have TLT anymore. I basically let it expire and I just kept the money. The reason I don't have it anymore, that trade was working for me like I expected, but the strike price on the TLTs are pretty high. I think I was using $105 strike price, which means I have to set aside $10,500 in my account to be able to trade just one contract. Now, I could use spreads to reduce the risk and the amount of capital that I would need, but I've decided to, go into some different trades, and I needed money to do that in my account. So TLT went by the wayside. So let's just jump right into this. And the first thing we want to do is, we just want to look at all the trades that are coming up that you might have to do something about, right? It's Options Friday. So this is my E-Trade account, and if you look in here, I have a lot of options in here, and I decided I'm trying to use a little bit of speculative trades. Instead of buying a stock outright, and like Airbnb, it's $110, right? Again, if I sold a put on Airbnb, I'd need $11,000. But I was hoping Airbnb would go up, so I decided to buy a call, and I invested it cost $17.85 per share. So I decided, well, I'm willing, if I was going to buy the stock, and how much would I be willing to lose, 10%, 25%, then I decided to basically the sizing is kind of, you decide Well, how much, if you bought $10,000 worth of stock and it lost 20%, say you were using 20% stop losses, that would be $2,000. Well, you could take the $2,000 and buy a call, for example. And you can see that trade, like right after I got into that trade, within a couple of days, the first day or two it went up. It was doing really well, but then it went down. But I don't have to do anything until June. This BXMT, now you see it, that's a minus. I sold this one. It's $18 a share is the strike price, and I want to own this in my portfolio. So 18, almost 20 times 3, that's $6,000. If I put that stock, I'll have about $6,000, but I got $1. See, I got $1.15. So I got almost 10% up front. Okay, so my cost basis will go down, but it looks like right now the price on that is $17.17. So right now I'm actually the time value has gone down, so I'm actually in the green. Right now, if today was expiration day on BXMT, I would put that stock unless it went over $18. Okay, so I have Caterpillar, another bullish one that I did that went down. The market's kind of been going down. CrowdStrike, the same thing. Actually, I bought a put on CrowdStrike, so that's the other side of the market trade. And of course, after I get into the trade, it always goes the opposite direction. So I bought this put. You can see I bought it. So this is a bet that CrowdStrike's going to go down. And I sold this put on Costco for $50. I got $1.55. So again, I want to own Cisco for the long run. And so right now, $50 strike, price is $46.43. If it's under 50 on June 16th, I'll be owning some shares. 5 nines, actually I'm up on that one. That's another bearish trade. And then gold, interest rates are going up. I thought maybe it was time to get back into gold. It should be doing really good in an inflationary period, so I decided to use a call. Again, invest $2,000. I have 2 contracts. They cost me $1,025 each. I gave myself some time, a couple of months out, so give yourself some time to be right. June. So most of these are out to June. This one is the only one, the SPXU. That's my hedge. I sold 5 contracts, right? And I got 13.50 strikes. And today, right now, it's 13.24. Now, this is my hedge. This is to hedge all my other portfolios. And you see a lot of my bullish trades are going down. My bearish trades are going up. So right now, I could roll this forward, which I did. I think I did that last week. And I would make $50, even though the price is below the strike price. See, right now the price is 26 cents below the strike price. So if it's below the strike price at the end of the day, if it's below 13.50, I will put 500 shares of SPXU. So 500 shares times $13.50. So, that's $1,350 per contract. So what I want to do is I'm going to go ahead. I'm going to leave this alone, and I'm probably going to put those shares. And then come next week, I'm going to probably sell some calls against those shares. So my cost basis, right, I got 32 cents for each one. So my cost basis is 13.18. 13.18. Right now it's 13.25. So if I get put those, my cost basis is going to be below the current price. I want to own some of these, so it will eat up, like I said, $1,300 per contract. So that's about $6,000 or so. Eat into my cash. So I'm not going to do anything in this account today. But if I didn't want to put those shares, I'd roll that forward and take my 54 bucks and of profit. Okay. So the next one is, this is my other account. This is my super tech account, small, DocuSign, PayPal, SoFi. PayPal got hammered the other day. I mean, it's like, I can't win for losing in this particular account. I have 2 covered calls in this one. I got one on PayPal and one on DocuSign, and I was able to sell those calls when the price on those stocks were a lot higher. You see an $80 strike on PayPal, and its current price is $63. So I'm going to I'll take this profit. That gets me $1.60 per share for PayPal, so that that lowers my cost basis. I've done this, I think I've done this twice now, so I'm probably $3 to $4 lower in cost than the 77. So I'm probably more like 73, which is closer to the 63 current price. So you just got to watch these prices, because it's not really worth selling a call in my mind, unless I can get a profit, right? I'm trying to get a profit or reduce my cost basis. So the only one that I see here that might be getting close, Unity, you'd have to go out 2 months. Have to go out to the July contract, 70 days. You'll notice that the strike prices are in $5 increments. When you get further out, that's usually what it is. See, if you come closer in, they're dollar increments. And so 36 bucks, if I found a 36, 49 days out, I could get $1 for that almost. My cost basis was actually less than 36, but so if I sold this 36 call and I made $1 on each share, and it got called away from me, then I'd make a profit. But I'm holding this for the long term. I'm hoping the market turns around. So I'm not really interested in selling a call for less than about 40 bucks. Okay. So that would give me $4 of capital gains, the difference between the 36.01, and actually my cost basis is more like 34, 33. So that would give me a $7 per share capital gains. So that would be 20% plus whatever I could get for the call. Say I got 80 cents. So yeah, I'd make 20-25% on that position for as long as I held it. But I'm just going to wait. Some of these have been going up, some of them have been going down. So I'm waiting. I want to sell calls on these positions where I have more than 100 shares, right? I gotta have 100 shares. Now my SPXU, I have some in here. Again, this is my hedge. So actually, I might do a trade here on my SPXU. Let's go out like a month. Actually 2 months, a month. 35 days. Now remember, the current price of SPXU is over here, 13.28. So I can sell the 13, which means I kind of want to hang on to my SPXUs, because if the market really crashes, if it goes down 10, 20, 30%, these are triple leveraged reverse S&P ETF. So if the market dropped 20%, these would go up 60, right? So that's why I own them. But I want to capture some of my cost basis, but I want to keep some that would not get called away from me. So $14. I know my cost basis is less than 14. I'm just trying to make a little bit of money, right? I think it costs me per contract. It costs me like $1 per contract to get into options. Let's go 42 days. 14. I'd get 55 cents per. So if I sold 2 contracts, I could make $110, 55 cents on 200 shares. If I sold 200 and kept 300, that would lower my cost basis about 20 cents for all 500 shares if I split it across that. So I think I'm going to do that trade. 14. Okay, so I'm going to do this one. I'm going to sell. I want to sell a call. It's a $14 call, $14 strike. So if SPXU is over $14 on June 23rd, it will get my 200 shares. I'm going to get 2. My 200 shares will get called away from me, and I'll keep the money, right? So that's what I'm going to do. I'm going to sell 2. So this is actually a sell to open. You can't really see the open part, but to sell to open 2 contracts. I always do a limit order. The market makers manipulate prices. So I'm going to do that, and I'm going to submit. All right, so that's the trade, and I'll see you guys later. Thanks for joining my podcast. I mean, my advanced options course, and again, the videos are for educational purposes only, but they are real trades, and they show you how to do real trades. So I hope you get some value from them. Thanks for joining. Here's my website. Please subscribe to my channel. Thanks very much.